Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
This week at Macy's, refresh your wardrobe for spring with great deals like the season's latest handbags and shoes, $34.50 to $129. Iconic Levi's jeans for him and her, $59.99 to $69.99. And active looks to move in style, 25 to 40% off. Plus, Star Rewards members earn on every purchase except gift cards, services, and fees. At Macy's. More at Macy's.com/Star Rewards. Savings off sale and clearance prices. Exclusions apply.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Well, hello everybody and welcome to the China Shop. I am your host Kyle, and joining me this week is the lovable, lion-hearted Leo from OrderFlow Labs. But before we dive into today's discussion, I'd just like to take a quick moment to say thank you to our sponsors and friends over at Manscaped, Trade Pro Academy, and of course, OrderFlow Labs. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with Manscaped getting into the world of beard care, now's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2BULLS at manscaped.com. As always, that is the number 2. And when it comes to institutional quality trading education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for all you degenerates who enjoy trading futures, you'll definitely want to check out the custom tools and studies over at OrderFlow Labs. And if you enjoyed today's conversation, you can learn more about today's guest by following Leo on Twitter at ES_F_Leo, or by checking out that aforementioned OrderFlowLabs.com. Leo also recently published his Trading Playbook. I highly recommend everyone checking it out. And lastly, reach out with your suggestions, corrections, questions for future guests. You can do that via email at twobulls@financialineptitude.com, or you can join that many times mentioned free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. All of those links will be in the episode description. Now that we got all the promo shit out of the way, let's kick it over to Leo. How you doing today, bud?
Hey, man, I'm doing well. Thanks for having me.
Yeah, it's been a while, huh?
How are you? Yeah, it has been a while.
I've been almost, it's tough to explain. Like, we go through these cycles, I feel like, when you're like first starting out, of finding something that works, it breaks, we lose confidence in that in ourselves, we completely scrub it, start over from scratch, and then we keep doing that over and over and over again until we realize that we don't necessarily have to throw everything away. We just need to look closer at the type of market conditions that we're at and see which ones work better in those conditions. Does that make sense?
Yeah, it's a lot of fits and starts to begin.
Right.
And then, it's a lot of adjusting, and sometimes overcorrection, right?
A lot of that.
You overcorrect, and then you realize that overcorrection later on. And that, that's kind of a process that you go through as a trader. And I don't think that it's something that you can necessarily avoid. But, I think there's a lot of resources out there that can help you, find some material to, things to think about. But, it still all comes down to who you are, who you want to be as a trader, the markets that you're trading, and how much work you've done and understanding those two things.
Right.
You are the market you trade, because that can be how you trade is totally different than how somebody else trades, and can be, and the markets you trade could be totally different than markets that other people trade.
That's very well said. I think that's one of the realizations that takes a lot of new traders a long time to learn too, is that there's no single one thing that's going to make you money. Anything really can make you money. Some people make money trading fucking horoscope shit, fucking astrology investing. It's a real thing.
Yeah, I
It
mean,
really comes down to, your, like you said, the risk management and being able to actually follow the process that you put together.
right. Yep.
So you recently published your trading playbook, and I got to say that's one of the most fantastic reads I think I've had in a long time.
Oh, well, I appreciate that. I'm not an author, and I'm a terrible writer, to be honest.
Really?
I had some help
Oh,
getting. I had some editing help, right? Like,
yeah, yeah.
you have. It's kind of one of those things where it's like I've got all my thoughts on paper, and constructed that for myself.
Hmm.
And then I just had this idea, like, well, why don't I put it out there? Maybe it could help, somebody else, either spark some ideas or make somebody realize, oh, like, if I'm going to be serious or successful at this, like I've got to, I need a playbook that, um, not dictates how I trade every day, but
Hmm.
is a guide. Like that's your North Star. Um, and that's not a complete collection of everything I do in a day, but there's a lot of the concepts that I use and the preparation stuff that I definitely use every single day. So,
That's I think what I was most surprised to see was the it wasn't like a bunch of setups like I was expecting when you first teased it.
mm,
Like this is
right,
like legit. Like this is how you prepare. This is how your mentality is handled. This is how you scale in and out of positions. This is how you look at higher time frames, and like it's very well done, very well, all encompassing. It's not just specifically setups. It's all of it.
right. Well, I appreciate that. Very kind.
How long did it take you to put that together?
I would say over the years, it's like a collection. I probably spent about 2 months, um, formalizing it once
Hmm.
I had the idea that I was going to put it out there because, you know, when you put something out on the internet, everybody can read it and criticize you and whatever. And, my own stuff that I have, well, I don't really care if something is a run-on sentence or
Right.
is technically worded correctly or whatever. So just going through that process took like a month or two.
I love some of the style of yours that's in there too. Like the very first sentence in there, it starts out with let's see. Do you mind if I read the quote?
Go for it.
All right. Preparing for the session to come is a critical component of our trading success. If we have no plan or routine that we go through each morning and we expect to win in the most competitive environment known, then we should take our money and light it on fire because it'd be faster and take up less time.
I mean, I'm all
such
about
a great,
efficiency.
such a great sentence. All about efficiency.
It's so true though, It's like um with my involvement with OrderFlow Labs, we see some traders, kind of come through the revolving door sometimes. And um I think that the one thing that people don't necessarily realize when they want to get into the business of trading is that it requires a significant amount of effort
Hmm.
and dedication to it. And it's not just like, hey, you can come, sign up for OrderFlow Labs and our tools are going to turn you into a profitable trader. You still have to understand general market mechanics, auction market theory, general concepts with order flow or support and resistance or whatever style you're going to use to trade. You still need to have an awareness of how these markets work, right?
Right.
And you know you are competing against the elite of the elite in the entire world. It's not
Hmm.
just like you're not just trading against people in Chicago. It's everywhere.
Yeah. What's the success rate of people who actively trade?
I mean, I think the number that's randomly thrown around is 95% of traders fail. But I don't know that I've ever seen like a legitimate scientific document that, or like a study that actually has the data.
Yeah, I think
I know that the CME has some statistics
hmm.
that basically indicate like after the 18-month period, if you're still around trading, you still have a trading account, you're likely to at least survive for, the next 3 to 4 years after that.
Oh, really?
So I guess the fall off is pretty significant in the first 6 to 18 months.
And that's the critical period where you're figuring out, like you said, just how much actual work and effort is going to be involved.
Well, and that's the thing is like, that's the great surprise,
Mm-hmm.
is you have this idea that you're going to trade, futures markets or the stock market. And you think, oh, well, like it can't be that hard, right?
Yeah,
Just come and trade.
exactly.
And I think that, to some people, that shock of, how much dedication and work you have to put into it to succeed is probably one of the things that causes people to leave, because it's like, oh, I wasn't prepared to, make the sacrifices necessary
Mm-hmm.
to be successful.
I think one of the things that surprised me most when I started my journey, like looking back on it, is how much self improvement I had to do. Like I did not understand, even though I had people, like experts like yourself, telling us, from the start that hey, this is a lot of this is mental. Like you have to understand your own psychology. Like even then, still not didn't understand like how important that really was going to end up being.
Yeah, I mean, you have to fight with yourself a lot, and you have to work through every negative aspect of yourself. Like
Yes.
there's, and that's just the true. I mean, the true nature of it is that yes, you need to have a profitable system that has edge, but you also need to be, I think that edge also can be found in a positive mental attitude, and making sure that you're trading well.
Hmm.
And um, I think that's one of the biggest components of being successful is having the right mindset, and um, not getting totally unwound when you have a bad day, or not letting your bias shape your entire trading session when
Mm.
everything else is telling you that your bias is completely wrong.
One of the things that
And
I
I
think.
even,
Oh, go ahead.
I still, sorry, I didn't mean to cut you off,
No,
but
go ahead.
I was just saying, like, that's still something that I, have run into to this day.
Hmm.
And I posted on Twitter about it, the other day, that I had a rough day. I didn't let my bias go, in spite of all the information, like against what
Right.
my bias was, and I, suffered a loss for that day. Um, but it happens, and I think your response to that, not only in the moment but afterwards, is key.
Mm. Yes. Actually, I think one of the things I finally started implementing after a conversation with, I think it was Rich Friesen, was I like to have, like, I can have a bias, but I need to have like written down criteria of when I will acknowledge that that bias is incorrect,
Right.
whether it be a level that breaks or, volume comes in and pushes above this zone and accepts, then, okay, the bias is over. I was wrong.
Yeah.
Like for some reason, just writing it down seems to really help keep you from getting like focused in and justifying, reasons to keep trying to short a, market that just wants to continually rip your head off.
Right. Yeah. I mean, you've got to have something
Something to
that keeps you in check.
get you out of yourself, right?
Yeah. Yeah. And sometimes the best thing to do when you're not trading your A game,
Mm-hmm.
is to just walk, just shut it down for the day.
It's such a hard thing to do, though, isn't it?
Yeah. But you know what? The most beneficial, like the most growth that I've had as a trader in the last year, has been absolutely not trading at certain
Mm-hmm.
times. Like, so for example, I stopped trading Globex about 2 years ago, and I love trading. I love to talk shop, and so like not being involved, during Globex time was hard. I mean, it sounds kind of weird to say
Hmm.
that, but it was like, no, I wanted to be, you know, aware of what's going on, like getting into some trades, whatever. And once I got over that, like it was easy, like after a period of time, it's like, no, I just don't trade that
Right.
anymore. Right. And then as I continued to grow, I realized, okay, well, like mid-afternoon and really pretty much the rest of the afternoon after the morning session, I'm not that profitable, right?
Yeah.
And used to I'd just fight through it and continue to trade anyway. And usually that just either you give up some gains from the morning or you end up break even in the afternoon, but you end up costing yourself more commission.
Right.
So one of the things that I've been working on is just being having that a couple of good trades in the morning, hopefully, and being finished, and then working on something else,
Yes.
and not even looking at the chart.
That's the key, I think, is you got to have something else you can do to fill that time, because otherwise it seems like you always feel like you're missing out on the opportunity to make money when your job is trading, right?
Right.
So like if you take a day off, then it feels like you're missing a day, like
Yeah.
you're not taking advantage of something.
Yeah, and I think that's part of the new trader journey is
Hmm.
realizing that there's like, yes, there may be opportunity in the afternoon or in Globex, but it's not for you.
Right. Right.
I mean, that's what I figured out, like, yeah, the market is trading and it is, the prices are moving, but it's not my A plus. It's not the environment that I want to trade in or that I'm great at trading. And so there's nothing wrong with stepping aside.
For me, that's like big news events now. I don't trade those at all. I wait at least, let everything start to settle out and the volatility die out before I try to make any trades.
Yeah, I think Job was famous for saying something like nobody's career was ever made, trading news events.
Yeah, there's so few of them. Like it seems like a silly thing to specialize in. I think I'd rather be better at the every other day of the week.
I know a lot of people that trade news specifically, um, just because there's so much volatility. But yeah,
Hmm.
I mean, I don't know. I had a poor experience a long time ago where I got stuck in a position because of a volatility event,
Yeah.
and ever since then, I don't really trade it at all.
uh, well, yeah, like it blew through your stop and didn't execute, or
Yeah, so there's this process when the market trades at a certain velocity
hmm.
that it's called velocity logic. And what happens is when velocity logic kicks in, it basically kills all of the limit orders on the book. And the market
Oh.
goes back to that, it goes to a free state kind of. And you'll see, like if you've ever watched a Globex open, right, you'll have a period right before the open, like pre-open state, where they're matching up like the bid and offer for that open.
Hmm.
And that's what will happen after that velocity logic's kicked in. So if the market moves, there's a link on the CME. I'm sure I can send it to you that describes it. But essentially, if price has moved a certain velocity over a certain period of time, like extremely fast, all the market orders, all the bids and offers will get killed off the order book, so that all the limit orders will get canceled, including stops.
Huh.
And it would go into a pre-open state. In that pre-open state, they're matching up, bid and offer. And once they get the bid and offer matched up, then the market, basically opens back up, like trading resumes. So it's kind of like it's not a halt, like it's not a 15-minute halt. It's like a mini halt, I would say.
Right.
And so
But that explains why everything stops moving sometimes during some of those big events.
right, it's happened more and more recently. And one time I was in a position, I got stuck in it, and my stop should have gotten me out of the position, but because they remove all the limit orders out, my stop was removed. And I didn't know this, but during that time, you cannot place a market order. Um, and I was trying
Oh.
to flatten my position, and I just kept getting a rejected order.
Oh, that's got to be terrifying.
Yeah, so lesson learned on that. But really the bigger thing for me was, all right, like, is it really worth the risk of all of that stuff going down? And it's like, no, it's not. So
I feel like that's something that I probably should have been aware of, maybe years ago. This velocity logic.
It's not widely known, but it definitely can happen. I think it's more likely to happen in pre-market trading and Globex,
Hmm.
because during RTH there is so much more liquidity on the book. But I think I actually saw it happen at one of the last FOMC
I think it
releases.
was the FOMC, or it might have been the CPI just before that FOMC.
Yeah, but either way, yeah, just not for me.
Yep. Yep. One of the things that you've been a big proponent of is the confidence aspect of yourself. Like I've seen you work with a lot of traders on the OFL Discord with helping them like build that confidence. And there's another quote from your trading journal that I like here, and that's that we think of ourselves as warriors. Act like it. Do not speak poorly of yourselves. We see areas for improvement. We discuss them with our team, and we work to improve those areas. Every negative word and thought permeates your brain and influences you. Speak about corrective behavior in a positive manner. That really spoke to me because I'd recently become aware of just how negative my thoughts were when I was in positions, when I started taking journaling like a lot more seriously.
Mhm.
Like before, like I didn't understand like really what I was trying to journal. I thought, oh, entered here, exited here. I thought this level looked nice. But I started putting a lot more context into that. Like I started tracking my thoughts while I'm in a trade. Did I like this trade when I took it? Did I not like it?
Mhm.
Why? One of the things that I found that helped shift me from that was I found that I was just focused so much on the P&L that that's where my emotional state was coming from. Anytime it was going my way, I was riding high. Anytime it was going against me, I was the worst trader in the world.
Right.
Shifting away from that into a process based approach where I only care now about executing the way I said I was going to do.
Right.
I think that's really helped shift that for me. I was curious what you've done to combat that if you've ever had to deal with it.
I mean, it's pretty similar. Like it's natural to be happy about profitable trades, and it's natural
Hmm.
to be disappointed about losing trades, right?
Yep. Yep.
And like that's a normal thing, you know?
Yeah.
And I think you have to realize that, well, this is a normal emotion, or like it's a normal tendency for me to be happy about good and happy about profitable trades and upset about trades that didn't work. And I think that what you said is key, is that if you remove out the fact that the trade worked or didn't work and
Hmm.
focus more on, okay, the trade that you did take, how did you execute that trade, right?
Hmm.
If you're long, how well did you position for that, for that price you wanted to be long at? Are you entering at the top of the wick, or are you entering at the near the low of the wick where you want to be? Are you buying rebids against structure, or like whatever that process that you have? Are you following that process? And
Hmm.
like that is way more powerful than it was a bad trade because I lost money.
Right. Yeah, a lot of people don't realize that the win rates are going to be there's going to be losers on trades that look good. That's
For
just the
sure.
nature of the game. It's
Right.
still statistics driven.
Right. And, when you get down to that level and you start to, like map out your executions, like, so I'll look at my day's execution and, start to pull, like, you can start to pull, like tendencies out of that. Like, if you're looking at it every single day, you can go, okay, well, like I'm picking the right spots to get into a trade. I'm not letting them work. I'm cutting them too early, and like excellent trade, right? Got in, executed well from an entry standpoint, but I didn't manage it well.
Hmm.
And so, how can I improve my trade management if I know that I'm entering at the right areas, but I'm exiting way too early? Then you can start to think about, okay, well, I need to stretch out the um, the my first take profit or my second take profit, or have
Hmm.
more of a rules based approach on when I close the trade or things like that. So when you do that more and more, and you just focus on the process and not the specific outcome, then you can pick up on some of those tendencies and go, okay, well, I'm sticking to my process and I'm working through that. But also, as you go through that day in and day out, then you'll start to pick up on, okay, well, I have this tendency that I've noticed, or, lately I'm not executing the way that, have been over the last 3 months. And then you can analyze and try to break down what's happening there.
Mm-hmm. One of the things that I've been trying to do too is like I try to make notes of like when I would flatten when I get scared, but I keep everything based on a 2-to-1 risk reward at this point. The goal is to determine whether or not, my tendencies would actually improve or not. And until they actually show that there'd be an improvement, then I don't act on any of that right now.
Gotcha. That's great.
Yeah. Well, that was one of the things that really I came away with when we started the Back to the Futures miniseries. I was cutting winners way too soon and taking full stops, and that was really skewing my profit factor.
Right.
I had a decent win rate, but I had a profit factor that didn't align with that.
Right.
One of the things that I wanted to kind of get your opinions on or your thoughts on is a lot of discussion about adding into winners. And that's something that I have always struggled with and that I know that I need to work on to start incorporating. But when I get a good position, I'm always afraid to add to it. And I don't know why. Like, how do you manage that? Like when you're managing a trade and you're looking to add and take off and you keep a particular core position, right? And then you're just kind of constantly adding and subtracting from it as the day goes on. Does that sound about right?
It kind of depends on the trade setup.
Mm-hmm.
If I'm in a trade setup that I think has legs to run,
Mm-hmm.
then I will definitely add and pull off and add and pull off, if possible. But there are times where it doesn't necessarily make sense to do that.
Mm-hmm.
Maybe the trade, setup doesn't have like, there's some trades that I'll take that, just don't have like a super, super long or like a great target. Like for
Okay.
if I said, hey, this trade expectancy, I think maybe, 30 points, but it's still worth taking.
Mm-hmm.
I may take that just as a scalp, but for some of the better setup trades, yes, I will get into the trade, put a feeler on, and then, as I mentioned in the trading playbook, have a zone or an area that, I'm kind of observing as I have that initial kind of feeler trade, and then want to be, more or less full size or get into a full size position in that area. And then obviously there's that spot of, this trade idea is no longer valid, where I just completely stop myself out, or reduce risk and then stop out.
So what is the feeler? What's the benefit of the feeler before, like, how does that change your thought process, or how does that make you understand the trade better?
Well, I've noticed that when I'm in a trade, I'm more engaged.
Ah, okay.
And so, if I'm already, the way I look at it is I have, a couple, setups or areas that I'm interested in, whether that's based upon OrderFlow lab tools or support and resistance, or just market generated information. Right? There's all kinds of ways you can derive an area that you have interest in.
Mm-hmm.
And what I found is that um, if I'm going to be in that trade, I might as well put a piece of that trade on, regardless of what's happening.
Mm-hmm.
Now, caveat there is I can't say regardless of what's happening, because we're just selling off, and
Right.
I'm looking for a long, I may give myself a few minutes to like see what's happening. But for the most part, and when, normal market conditions, in a standard day, if I have an area that I'm interested in, I'm going to go ahead and put a feeler trade out there.
Mm-hmm.
And that's going to, one, start to establish my position. And then two, I'm significantly more engaged when I'm actively in a trade.
Mm-hmm.
and I think that's probably true for a lot of people, because when you don't have any risk on the line, you don't necessarily need to be aware, fully aware and present, of what's going on at the current moment.
Here's a clip from my conversation with Leo from OrderFlow Labs.
And sometimes the best thing to do when you're not trading your A game, is to just walk, just shut it down for the day.
It's such a hard thing to do, though, isn't it?
Yeah, but you know what? The most beneficial, the most growth that I've had as a trader in the last year has been absolutely not trading at certain times. Like, so for example, I stopped trading Globex about 2 years ago, and I love trading. I love to talk shop, and so like not being involved, during Globex time was hard. I mean, it sounds kind of weird to say that, but it was like, no, I wanted to be, aware of what's going on, like getting into some trades, whatever. And once I got over that, like it was easy, like after a period of time, it's like, no, I just don't trade that anymore. Right.
Full conversation with Leo from OrderFlow Labs will be available February 27th. If you haven't heard by now, Manscaped now sells beard products. That's right, once again revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths on just the one guard, it's also waterproof, so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there, though. They also created 4 dermatologist-tested formulations for your post-trim care. First is the beard shampoo and conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts: beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths.
This week at Macy's, refresh your wardrobe for spring with great deals like the season's latest handbags and shoes, $34.50 to $129. Iconic Levi's jeans for him and her, $59.99 to $69.99. And active looks to move in style, 25 to 40% off. Plus, Star Rewards members earn on every purchase, except gift cards, services, and fees. At Macy's. More at Macy's.com/Star Rewards. Savings off sale and clearance prices, exclusions apply.
I think for me, my issue is when I get into a trade, then I start getting biased into wanting to look for the information that supports it.
Of course. Yeah. I mean, we all struggle with that.
You're right.
But, you have to be objective, and just observing. So getting that initial trade position on, then you're just observing, right? So you're more engaged, and you have some position on at a predefined area that you were already looking at. And so now you're looking for that activity objectively, hopefully, and you're when you see if you're long and you see buying really hit the tape, at that spot, then maybe you add to that trade. And then as price starts to move away from your entry, maybe that's an indication that you should add to that position, because you've got into the position, you've seen some buying, you've hit that, and then you now have price moving in your favor. And so now you're thinking, okay, well, this is, I've got into the trade. I saw some activity that confirmed that, so I added to that, and now price is starting to go in that direction. And so now, kind of thinking, hey, this is a really good trade. And so I want to add to that position so that I can get the maximum, I realize the maximum potential of it.
Right.
And then the more that element of, let's say you have 6 lots on and you're going to add another 4 once price starts moving. And I think the challenge there is, how far from your entry
Right.
and price starts moving do you add, right?
Mm-hmm.
And then the other aspect of it is, okay, well, if I add to my position, my average price obviously gets worse, right?
Yep.
And so I think that aspect of it is just a fear-based thing, because you're thinking, okay, well, I have a great entry and price is way above my entry. And I don't want to add to it because that requires more mental capital, right? Because
Yeah.
now if I'm long and I just brought my price up another 10 points or 5 points or whatever, then, now I have to still pay more attention, versus if I just sit in my initial trade, I can kind of relax. Like I don't
Mm-hmm.
have to do anything. And, I think that in itself is a bit of a lazy approach. Like if you have a really good trade, you should really maximize that as much as you possibly can. And it's a very difficult thing to learn,
Yes.
because of that element of, well, if I add, my price gets worse, and then if the market comes back, then what do I do if it's testing my area or my entry now? Whereas if I didn't add, I don't have to worry about those small pullbacks or kind of market gyrations as much.
Mm-hmm.
And really, I think it just comes down to, you have to make a concerted effort to, once you're down to, you have a routine, you have a process that you're sticking to, the next skill step up as far as trade management goes is adding to that position and really pressing that position when it's working.
Right.
And being afraid that your price gets worse as you add to it. And what do you do when the market comes, back to your entry? Sometimes that's not necessarily an easy thing to do, but over time, it's just like an exercise, right? You build up the routine enough, you'll get more and more comfortable with it.
That sounds like something too that really benefit from the review process.
Absolutely. Yeah.
When I'm analyzing my trades and looking to see how much more runway they had from where I took my profits, I can also be looking at the pullback points and look and seeing where those pullbacks are coming to. Maybe replaying
Yeah.
the DOM to see what kind of activity showed up at those pullbacks and how it looks different
Right.
when it actually reverses on you.
Yeah. And there's a difference between, say, a momentum add where you're adding to your trade for momentum, because, let's say you're long and, price starts to go and you're thinking, okay, well, momentum's really picking up, so I'm going to add to that trade immediately.
Mm-hmm.
Versus there's that momentum add that is a skill in itself. And then there's the add on a pullback, right?
Right.
And, that's probably something a little bit easier to incorporate, because, if you're a long bias or you have a position that's working from a long standpoint, you want to be buying those pullbacks because those are additional opportunities for you to stay engaged to that long trade as long as the thesis is still intact. So adding to winning positions on those pullbacks
Mm-hmm.
is definitely a lot easier to start with. But what I would say later on, as you get more developed, is that the real like force multiplier from a profitability standpoint is when you're adding good size to a momentum based move. Because you're not every trade offers a pullback opportunity, right?
Yeah.
And
Yeah.
when you have momentum at your back and you can't really lean into that, you can maximize the fullest amount of that opportunity.
It sounds like I got my next 3 or 4 weeks planned out, back testing some ideas. Yeah, one of the I definitely struggled with the idea of trying to add because it shifts, like you said, where you're basically where your core position price comes, and then I don't know how to handle that when it comes to like stops. But I've never put a plan together for it, so how can I expect to do anything if I don't actually try to plan it?
Right.
That's one of the things that I think has really kind of made itself clear the longer I've been doing this, is that you really have to have something planned out in order to engage with the markets. If you're just doing it on a whim, one, you're not going to learn anything from it. And two, it's very rarely going to work out. And even if it did work out, you're not going to know what specifically about it worked out. And so you could do it again.
Yeah. I mean, anything done on a whim more than likely is going to just take your money.
Right. Might as well light it on fire.
Right. Speed up the process.
Exactly.
Yes. I mean, you should absolutely, I don't think enough traders are sim trading, enough practicing some of these things. Now there's certain elements to, like, say, if you want to get better at adding to a position and, really pressing on momentum or whatever that is, you should definitely start in sim and figure out
Right.
how that trade management process works. Because one, not all trading platforms are the same. It's not super easy to add or subtract to positions on all trade platforms. So you have to figure that out, one.
Mm-hmm.
And then two, you just have to get the mechanics down, right? Because you
Right.
want that process to be smooth. It's kind of like a DJ working a DJ set. When you watch them, they don't look at any of their instruments. They know it
Mm-hmm.
like the back of their hand.
Yeah, like playing guitar, you shouldn't be looking at the fretboard.
Right. And you shouldn't be for trying to figure out how you add or subtract to your position. You should do that in sim, but you should also do that practice in live once you figured out the mechanics, because the other element to that is that mental game piece of it, the fear-based responses that you'll get when your price all of a sudden becomes worse.
Sim is an amazing tool to prove concepts out, but it does not do much to help with your mentality. Like there's a major difference even between trading, 10 ES lots in Sim versus one micro when you're actually trading it and it means something.
Absolutely.
I want to shift over to DOM reading because I hear a lot of people talking about it. I know I dove into it trying to learn it at one point, but then I just ended up finding that I was staring at the DOM all day long and I could justify anything I wanted to. Like, how important is DOM reading to your trading, and when should a newer trader look to start incorporating that into theirs? Is that something they should start out with immediately, or is that something they should use to complement an existing setup?
No, I think for new traders, the DOM should be something that you tackle later on.
Mm-hmm.
And I'm sure all of the DOM order flow traders will come after me for saying that. But the reality is like, you have to know what you're doing in a market. You have to know what support and resistance is. You have to know, auction market theory. You have to be able to read a time and sales. You have to, use your platform. You have to know how to use stops. Like, all that basic stuff is overlooked. And that's like, when you first learn to play basketball, you're not like, taking threes and, running up to dunk
Right.
dunk on the basket, right? Like, you're learning how to dribble
Yeah.
and all of that stuff. So, I mean, I would definitely not recommend it for a new trader by any stretch of the imagination. Get all the fundamentals down. Um, if you want to trade with order flow, sure, you will want to learn how to use a DOM or how to read a DOM. Now, at some point, you'll get to the time where you're ready for that. And as far as what it can offer you, I would say that for me, it's very important. It sits right at the center of my primary monitor, and it helps me do two things. One is it helps me understand and have an awareness of the, I would say, quote unquote, personality of the market for that session.
Okay.
And what I mean by that is you can see, if the bid or offer is one more aggressive than the other for any given session. And if it's one side is particularly quote unquote stubborn, you can pick that up, and just knowing the personality of how the market is trading is hugely beneficial. You can also pick up on speed and pace.
Yes.
And, as you're just hanging out during a session, and, this happens sometimes in the afternoons. Earlier I mentioned I don't trade the afternoon that much, but, usually I have an awareness of what's going on, generally speaking. And the DOM can help you pick up on a change in market activity. And what I mean by that is, all right, well, if, yesterday, the market was just grinding higher and grinding higher, and, every little pullback was bought. It was very slow and just kind of that grindy one-way action. Well, if somebody starts slamming the tape and, hitting the offer on the DOM, you can pick that up like very, very quickly. And when you're able to spot those like significant changes of market events, you can capitalize on those in a significant way. And that would be, I'm sure I wrote about this in the playbook, but that's like that, that's like that discretionary, setup where it's like, if you were offered this opportunity 100 times, you would take it 100 times because
Right.
it's so obvious,
Right.
it's like, it's so clear as day that something has changed, like there's been a very significant change in behavior and pattern between the buyers and sellers. And, one side was dominant all afternoon. Then all of a sudden, it's like there's a flurry of selling and offers are, stacked up and all of that good stuff.
Bids are running away.
Right. So
Yeah.
like you can pick up on those little nuanced pieces of information that you can't see on a candlestick or necessarily a footprint chart. And that's just like, that's something that comes with time. Just staring, just having it around and watching it. I mean, it sounds probably going to sound kind of dumb to say that, but I mean, it's true. You just have a more of awareness of, how the market's trading for the session. So,
I've definitely come back to it. I don't execute off of it, but I try to. At this point now, like when I see key areas, then I'm flipping it on when if I don't have a position on, or if I'm in a position that I don't need to do anything with at the moment,
right.
just so I can try to observe. Uh, One of the things that I think is new traders struggle with is that they don't have any intention behind the things that they're when they're looking at charts.
Right.
Like it's just, oh, I'm observing. Well, what are you observing?
Right.
And that's part of the thing that I think I had struggled with before with DOM reading is that I didn't have anything intentionally that I was looking at. Does that make sense?
Yes, absolutely.
Like now I have this week I've been putting down in my notes in my journal, like, okay, this time period, I want to go back and replay this day, this time period, because something changed here and I want to see if I can see that.
Yeah, I mean, there's the other aspect that I use the DOM for is obviously execution. To aid the execution process. And I would say I look for two or three things, and one of them is absorption.
Mm-hmm.
And really, that to me is probably one of the easiest things to pick up on, because if you throw like a delta by price volume profile next to a DOM, you can see absorption real time.
Mm-hmm.
If if 5,000 lots comes through at one level on ES, likely there's an iceberg there, or somebody, absorbing, selling. If you're able to see that real time, and then at the same time you look at your time and sales and you see a bunch of offers being lifted,
Yeah.
aggressive buying coming in after that absorption, that's where execution element of using the DOM comes into play.
Mm-hmm.
So you're able to kind of map out, okay, well, I'm seeing this absorption. Now I'm seeing aggressive buying activity, and they're reloading the bid. And, that's how I, get into that trade.
It's looking for keys when you get into a fight zone, trying to see who's got the upper hand in that fight.
Right.
Yeah.
Yeah. So you're looking for absorption, and then in addition to that, looking for aggressive activity. And what I would say, what does aggressive activity mean? Well, one, offers, if say you're looking for a short, offers stacking and continuing to press. What I mean by that is, let's say we're trading, NQ is trading like 12,650 right now.
Mm-hmm.
So if we come up to 650s and somebody sticks an offer, 20, 30 lots, and they get filled and then they refresh,
Mm-hmm.
that's information that's telling me, hey, there's somebody interested in selling here, and they're being pretty aggressive about it because they're refreshing, right?
And they got big pockets too, because they keep reloading it.
Yeah. I mean, if they have 20 lots, they probably have more.
Right.
So if I see that continual refreshing, and then, bids start to pull and they start to hit the bid side,
Mm-hmm.
they start to cross the spread on and really sell the market, that's going to give me a little confidence to, one, if I'm already in a position to go ahead and add to it, or two, if I'm not in a position to go ahead and get that entry going. So it's really, for me, used for just awareness of how the market's trading, and then two, that execution component of spotting absorption real time, and trying to figure out who's being aggressive.
Mm-hmm.
After that, after you're in a trade, you still want to pay a little bit of attention to have that market awareness that I was talking about.
Mm-hmm.
But I think the more that you stare at a DOM, like you said, you can make an argument for both sides.
Yep.
So you really just want to use it for those key areas, or those key spots that you want to get into a trade with. And then from there, you just manage you manage the position, manage your risk, and, take profit where it makes sense, et cetera, et cetera. I don't make any, I don't necessarily make any take profit, or trade management positions just based off what I'm seeing on the DOM. That's more, looking at the volume profile, other stuff that I have that, kind of gives me targets.
I learned that lesson the hard way. I don't know how many positions I cut early because, it's going to sell off. It sells off 5 points and then immediately rips their heads off.
Right.
No.
Yeah. Yeah. You definitely want to be using that sparingly, especially as a newer trader, because I can't imagine how it would fake anyone out.
Mm.
When you get into a trade, because, there's, like, it's a market, right? Like, there's
Yep.
buyers and sellers.
There's ebbs and flows.
Yeah. I mean, it moves around and, things change. But, I think the benefit to using that is when you have that area and you get the entry and you see that absorption,
Mm-hmm.
when you see that over and over and over, now you get a better idea of what you're actually doing.
It becomes almost subconscious, like muscle memory, right? Yeah.
Yes, absolutely. Right. It's like riding a bike.
Mm-hmm.
You don't need to, do the math between every single bid and offer that's, put on, or taken off or whatever. You start to pick up on those things naturally,
Mm-hmm.
without, figuring out, what side's heavier versus the other.
Right. Before we wrap up, I'd like to just take a quick moment to hear about some of the new stuff you guys got going on over at OrderFlow Labs. I noticed that you guys have really started to embrace more of the educational side, and I really loved seeing that. I love your guys' community, the stuff that you do working with traders, and then the stuff that Job puts together. Like the whole team over there it seems like you guys have really stepped up your game in the last 6 months to a year.
Yeah, I mean, we have a schedule every week that we follow pretty regularly. So we have 2 dedicated on-voice sessions with several moderators, that aren't necessarily OFL, um, but they're they have over the period of time gotten good feedback from our group, and so they come on and talk about what they're seeing for the day. So that happens twice a week,
Mm-hmm.
and then Job goes through a pre-market routine Tuesday, Wednesday, Thursday, and then a post-market um, routine, I think on Wednesdays. So midweek update, basically after the close or in the afternoon.
Any big plans for 2023?
Well, we teased this thing called autoplot, and essentially it's a collection of studies that is going to automatically plot and manage most things you would want as a trader. So
Uh-huh.
one would be RTH gaps, automatically tracking that. And so if you open in a gap down, you're going to know it because you'll have a zone that tells you you're in a gap. And then as you trade into that gap, then that zone will shrink, right?
Ah, interesting.
So just automatically mapping out RTH gaps. The other will be single prints. So for example, today, I didn't really realize the power of knowing some of this information until I started putting it on my execution chart. So for example, today in NQ, we had single prints that posted right after the initial balance.
Okay.
And that is really key information because, that's telling you there's a very strong participant on one side.
Mm-hmm.
And, those have held up. And one of the rules that I personally have is I don't really fade. I don't really trade in the opposite direction of a day when we have single prints.
Yep.
But what I've noticed is that, I didn't necessarily, I didn't always pay attention to a TPO chart
Mm-hmm.
that would tell you that. And so I may miss out on, in the immediate moment, as soon as we have that single print developing, you're going to know it immediately.
Is that customizable as far as the time period you can set too?
So they're going to be set to 30-minute periods.
Yep.
And you can set either RTH or Globex or both.
Oh, nice.
So if you wanted to be able to know, like my own are only set to RTH because I don't trade Globex. Don't really care that much about the Globex. Some single prints, but it's available as an option.
Mm-hmm.
And then the other would be poor highs and poor lows. So that's just equal, 30-minute period that has the same high or low.
Mm-hmm.
Ours is adjustable so that you can make an allowance, right? So like NQ rarely ever makes, the same
Right.
high to the tick.
Yeah.
So you can make it, have an allowance of, say, it's the same high within 8 ticks, then, you'll get a poor high.
Almost like a tick compression.
Yeah, exactly.
Yeah.
And then the last is automating balance areas. So, we've just taken and said if the value area is overlapping,
Mm-hmm.
any 2 days, right? So it takes 2 days to start a sequence. And then as you continually overlap that value area so we're building out the value area as time goes on, right? And so that balance area can expand.
Mm-hmm.
But what's cool is that when we were working on this, there was a specific pattern that kind of came up over and over and over, and it was this: the market would look below the balance area and then come back, right? So it's like that peak and fail sequence.
Right. Right.
And so we built that in to the study to basically ignore that peak and balance day so that you can clearly see your balance area, that peak below, that look below, and then that,
Right.
That failed the next day. If the market opens back up inside of that value area, you can go, okay, well, this is potentially a peak and fail, and
Mhm.
maybe you get a strong response. And we actually had that this week. So I posted on Monday morning, that we had a balance area that we've been trading in for 12 days now. But on Friday, I think it was Friday, we traded below it. But Monday we opened back above it, and I mentioned, hey, the setup that I've seen on this over and over and over, just after working through this, is obviously when you fail to break down from a balance area, obviously you're going to go likely trade to the other side of it.
Yep.
And so far we've gotten, I don't know, 75% of the way there. But who knows what happens next? But I mean, having that automated and follows the same process, because we aren't perfect. We use some subjectivity sometimes when it comes to like drawing balance areas, right? So this is just a automated way that it does, like, the algorithm does the same process. It doesn't have any subjectivity to it, right? And so I think that's key. And one thing that really, the goal behind it was to, take out that subjectivity on the balance areas, but also the other three things. There's stuff that I want to be aware of. I just don't want to draw them.
Right. It saves you a lot of time.
It saves you so much time. It's like,
finding single prints would be a pain. Yeah.
yeah. So how do you track single prints and, RTH gaps
Right.
while you're trying to trade at the same time?
Yep.
And so we've just written code to kind of solve that problem, so that they automatically go away when they're traded through. So it's like automatically managed, by the code. And so we named it autoplot.
I like it. When's that coming out?
So for Sierra, it's going to be March 1st. And then for Motive, Wave, and Ninja, mid-March, by no later than April 1st.
That's awesome. Any other stuff planned for the year?
Well, we made an announcement about, we have been running this OrderFlow bot in Discord, for ES. And I think we're going to make some additions to that for other markets. So we'll likely be doing one for CL and one for NQ.
Oh, I thought that was a trade bot. I thought you were putting together an algorithm. I got really excited when I saw that.
No, so I mean, we had a lot of people reach out and say, well, I don't really trade on Sierra or Motive or Ninja. Can you guys bring your stuff to TradingView or this or that? And the answer obviously is like, Thinkorswim doesn't support our needs. TradingView doesn't have all the data we need, but we can confidently say there's a ton of value that we have, like you mentioned, the educational aspect. Being on voice on a scheduled basis, and then tons of pop-ups during the week. The pre-market planning from Job, and then Cap also is doing daily planning for ES. So there's a bunch of value in there, and people wanted to be in that. And so in addition to that, we have an OrderFlow bot, that's generating, bullish or bearish order flow events, that averages 2 to 3 times a day. And it's just designed to help you, not necessarily just take every trade. The running joke in OFL right now, though, is that,
Right.
just don't fade the bot. But it's been doing pretty good.
Sounds like it.
It's just it's an added piece of confluence with, if you already have a supported resistance line at a spot, and we print bearish or bullish order flow, you have an opportunity to gauge whether you want to take that. So it's kind of like having some of the studies
right
available to you. Just it's posted in Discord. So right now it's only running on ES. So we're going to expand that.
It's also, speaking of the stuff you guys have been putting together, I think your YouTube channel is criminally underrated as well. There's a lot of great content on there that's available to the public. And then there's just even more stuff once you do become a member that you get access to, because you guys record all the sessions that you do. There's a lot of spontaneous things that seem like they get recorded too. There's just so much good information there.
Yeah, I mean, Job's pre-market planning sessions are always recorded and always uploaded to YouTube, which makes it cool because, it's like you can come in and learn from an experienced trader on how he prepares for the, the market, pre-market. And because it's recorded, you can play that back.
Right.
And you can go through every single day and go, okay, well, as you start to go through, they're 5-minute sessions, maybe 10-minute sessions. So they're not incredibly long. But as you start to pick up on some of the nuances, you can learn from that and develop, your own, pre-market plan.
What's really cool is you can do your own pre-market, then you can go back and watch the recording one, and you can see how the similarities are.
Yeah, you can see like what he was looking at on the volume profile, and compare that with your notes, and then you can go, okay, well, I didn't see that what he was looking at.
Right.
So you can make tweaks and adjustments as well.
All right, well, I know you got a heart out, so I'm going to go ahead and wrap this thing up. I'd love to chat for another hour, but I know you got commitments. So that's going to bring us to the end of the episode today. I'd like to thank everyone who stuck around to the end, and obviously I'd like to say a heartfelt thanks to Leo the Lionhearted for joining me. If you'd like to know more about how Leo trades, you can find that trading playbook on OFL's website at orderflowlabs.com, and you can check us out at twobullsinachinashop.com. Be back in your ears soon with another exciting episode, but until then, tap that 5-star rating like your creepy uncle and take care.
Thanks, Kyle.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.